well, this is not the best times for practitioners in the world of business as this cash crunch inflicted majority of Nigerians by the CBN has actually slowed down activities across all sectors. Apart from the elections, volatile foreign exchange markets, scarcity and queue for fuel, absence of credit, high inflation and interest rates also hurting the economy. Now, due to the results of this, many people, especially investors, have either suspended their projects or slowed down works across the space, leading to less productivity and high inflation. Well, it looks like the CBN is finally listening to the call from, of course, well-meaning Nigerians, and of course, the Supreme Court, as old note seems to have flooded the market in recent times, making it look like the scarcity of cash is almost over, is what I would say, while other contending rates continue to shift higher. Well, let's talk to Mr. Temitope Omoshuyi, who is an investment strategy manager with Afri Events West Africa. Mr. Temitope, thank you so much. It's good to have you join us on the program today. Well, let's start with the present situation. What is your assessment of this, a little bit of balancing or using the old notes, getting them into circulation? Do you think that it is all well at the moment?
Not so. I would say that yes, to an extent, it has alleviated the pains of Nigerians because the currency redesign and the time frame inflicted, severe pains on Nigeria due to the structure of our economy. An economy where more than 40 or close to 50% is largely informal. That means the economy is highly cash dependent. So I think the fact that the CBN allows Nigerians to use the old notes is better off because a couple of persons I've spoken to said, well, now that they have access to the old notes, and that has really helped to an extent. But then I think we have created a lot of problems that are not necessary, and some of these issues could linger beyond just this second quarter. And the first one would be how it has impacted, economic activities. So, for instance, in fact, I could liken what happened in Q1 to the impact of, restrictions to movement in 2020 as a result of COVID-19. Because people could not transact, and what drives an economy is consumption spending. I know a couple of people that said, they had to ignore so many things because they didn't have enough cash on them. They had to ignore. And we know that, more than 60% of the Nigerian economy is consumption spending. So if people are not buying, or people are laid back, or they are rationing few cash they have on them, or they had in Q1, then we should expect that it would have impacted growth significantly. And I think the bad part is that there's no clarity right now as to if the CBN would actually allow people to continue to use it even after the December deadline. Because one thing with policy, clarity, transparency are key to effectiveness of policy, whether it is monetary policy or fiscal policy. And in addition to that, when we make policy, it's not just policies are to address macroeconomic objective. On the other hand, or in addition to that, it is also to show foreign investors that this country is innovative, forward-looking, and policies are geared towards, economic stability. But with how, the currency redesign was implemented, it's quite clear that we are not taking, the right policy, and we are not even careful about policy implementation because the implementation was largely flawed. In fact, I usually jokingly say about this policy that it's rich man problem. We want to drive cashless policy without having the necessary infrastructure that would support, the implementation.
That takes me to my next question. Let me allow you land.
All right. Sorry, because if you look at countries that are, that have high level of cashless policy, they can boast of high level of access to electricity, over 90%, internet facility over they have close to 100%, and literacy rates, because one of the problems that accompanied this cashless policy was that people that were not really comfortable with e-banking, they got defrauded. In fact, my mom also had a fair share of this, and money was deducted, and when she went to the bank, she was told that some people deducted their money and she didn't get the money back. So you know what that has caused? breached trust. In the financial system and in using, e-banking platforms. So we don't have the necessary infrastructure, both quantitative one and qualitative, in terms of literacy rate. Nigeria, less than 70% are literate, and you and I know that even the literate ones they are not so sophisticated to understand how effective and how to navigate alternative means to using cash. So all of these factors, we didn't look at them before we introduce, or we talk about the timeline for implementation. So really, this is going to create more problem than we thought, because people will begin to hoard money, and what drives an economy? What drives an economy is an efficient financial system that people can trust. Because right now, if I have whichever cash I have on me, I won't take it to bank. And I'm sure this, because there's no predictability with monetary policy. We don't know if maybe by November, the CBI will say, okay, certain
bring all
cash,
the money again.
Certain cash there will be limitations. So people will hold on to cash. And the economy cannot grow efficiently if you don't take money to financial system, and the financial system is not lending to the private sector. There has to be, the proper and efficient intermediation. As a matter of fact, the policy was actually meant to, one of the reasons was that they wanted monetary policy to become more effective. But now that people are they are hoarding cash, it means monetary policy will become even less effective.
Less effective.
Because people don't want to interact with commercial banks anymore, or they have reduced, the interaction. So we are back to square one. We didn't achieve the financial inclusion. We didn't achieve effectiveness of monetary policy. That that was one of the objectives. Inflation is still red hot at 21.9%, and it's expected to stay,
go higher.
So if you look at all the policies, in fact, the last one is that we talk about, or the CBN mentions that cash outside of bank to currency circulation was over 80% in 2020. That was the reason for the policy. In January of this year, right, it went down to 57. You would have applauded the CBN, maybe they have achieved the objective. But right now, February, it even went to 85%. So currency outside bank is still the same level that we saw in 2020. So far, so good. Nothing positive has been achieved.
I like that. I like that wrap up. So far, so good. Nothing positive has been achieved. And I told that line, and I agree with you. I had a chat with my bank, with my account manager today. And he told me that they are doing more of paying out, that they are not getting monies into the banks anymore. To corroborate what you said, that means that is the fact. People are losing trust in the commercial banks. Let me ask you this question in two ways. What does this mean for the financial institution? Already you said it. When that distrust is there, just like the subsidy issue we mentioned earlier, what does it mean for the financial space? And as we move towards December, what should these banks be doing, particularly with their online platforms, technological apps? What should they be doing to be able to meet up and accommodate the volume of transactions they've witnessed in recent times?
All right, so starting with the first question on how it empower the banks, funnily, it could be positive for the bank to understand.
All those smaller banks are taking away. I don't want to mention names. All of those online banks are now taking charge.
Yes.
The federal government came out yesterday to say some of them are not approved, some are approved. You know what I'm talking about.
Yes, I get your point. But then, yes, I understand that the fintech, companies are actually competing with commercial banks. But if you look at some of the most reputable fintech companies, they still depend on commercial bank to survive. So in a way, you could trace some of them to commercial bank, which means that a number of these banks will make a lot of money from transaction costs, because volume of transaction and value increased as a result of this policy. Okay. Although it has really increased the risk, susceptibility of customers to using unregistered fintech companies because of their need to just facilitate transactions. And that is not even the fault of the bank. It's still just the outcome of policy. So the onus lies on the government to ensure that financial system stability is embraced and is entrenched in Nigeria. So it's not even about the bank, it's the financial system. So, and on the other question that you asked about how banks should prepare, I would say that we don't even need bank to address this. Who should address this is monetary policy, because banks are capitalists. They will only look at what will bring about profitability. So if you would suggest to a bank, you tell them to invest more in their e-platform so that they can enhance efficiency and reduce failed transaction and all of that. But what is the incentive? We have very few banks in Nigeria. If you report them, how much of responses have you gotten from the central bank, or how many banks in Nigeria have been punished because maybe certain customer got defrauded or they didn't get an immediate response? So I think the onions or most of this responsibility is on the CBN to ensure that banks come up to speed on facilitating or just supporting the volume of transaction that have resulted from this policy. So the CBN has to do a lot and ensure that maybe there's a threshold for efficiency that will be developed by the CBN, and they will monitor it over time. In addition to that, response time. In fact, the CBN could create another parallel, maybe response team that would address customer or client concerns. If that is done, and people see that yes, the CBN is responsive and would actually interact with banks, maybe by punishing some banks that would not respond on time to their clients, banks will come up to speed. They will be on the alert. So I think the bulk of this work is on the CBN, and I can tell you, sir, if you use your Zenith Bank or whichever bank you use, and maybe your transaction failed and all that, you won't take your bank, you won't go to another bank because we have very limited banks in Nigeria, and the banks that are trusted in Nigeria are very few. Despite challenges, people complain about several banks, right? Top banks, but till date, if you ask these people, have you changed your bank? They haven't changed. They still have to stay with the banks, which means banks don't really lose so much as a result of despite the frustration of people. So I would say that the CBN has a lot to do at this time, not even the bank, because if banks spend so much money on infrastructure or technology that will enhance transaction, it will increase their cost, and they will ask you, okay, what is the benefit? It's all about profitability. They are capitalists, so regulators must actually come up to speed at this point in time.
Interesting stuff. It's getting more interesting. What more do you think the monetary guys should do? That synergy between them and the fiscal side is something that everybody's also talking about. Remember when this policy was instituted, the minister said, I don't know anything about this. At the end of the day, she had to key into it. But do you think that synergy is also needed at this time as we move on?
At every point in time, in fact, for effective monetary policy implementation, fiscal authority must be in sync. So it is very, very critical from the current increase in interest rates, right? Increase in MPR to address inflation. We have to ensure that fiscal authority is also aligned, because on the one hand, we've seen that interest rate is rising, or MPR is rising. On the other hand, government keeps borrowing, and we see growing ways and means. That's why we are not seeing most of the impact, of this increase in interest rate on inflation. The same thing goes for what is happening to the financial system as well. We have to actually work in sync. Or the Monetary Policy Authority has to work with fiscal authority to address certain issues. In fact, Monetary Policy Authority can even work with maybe Nigeria Population Commission or organization of the government that understand the demography of the country, so as to provide specific solutions to alleviate the impact, the negative impact. So I think it's always very important, and it's even optimal to ensure that the two policy authorities work together. Otherwise, monetary policy will not be effective. And we've seen it over time. Like I mentioned, interest rate is rising, inflation is rising, because on the other hand, government is embarking on expansionary policy through ways and means and other huge borrowings.
Very worrisome thing. What is your outlook and for the entire, should I say, the financial space, considering all of these challenges that we face? And also, what better way do you think we can address this redesign policy issue? So
I think we don't even have to wait till December 31st before the CBN provide clarity on what will happen going forward. Why do we need to wait? Clarity is important in every economy. Like I mentioned, policy decision is not just about a macroeconomic objective alone. It's also to show foreign investors, foreigners, that the country is proactive, is innovative, and government is putting right policy in place to address structural problems and all that. So I think the problem will even come in Q3 if we don't address this on time, because people start hoarding cash because they don't know what will happen in December. And it's so sad to know that when you look at Nigeria economy growth, the best growth usually come in Q3. Q1 is usually typified by slowdown in growth. A bit of pickup is seen in Q2. Q3 is where we usually see massive growth. So if people are also slowing down on economic activities or they are managing cash in Q3, it means that this year's growth could even underperform so many expectations of about 30%, maybe the IMF and a couple of other research outfits that have provided outlook. On the financial system stability, the financial system is still very strong. Looking at their non-performing loan, the asset quality, capital adequacy ratio, all of that, despite the recent event we saw about how Ghana has been affecting, some of the financials of this financial institution because they had to impair. Ghana had defaulted on coupon payments, so banks are taking impairment. So impairment is more like a cost to bank. So despite all of that, you still see that so many banks are staying afloat because they are properly regulated in terms of their soundness. In terms of their soundness metrics, they are well regulated. But the problem is what it will happen by the end of the year when you look at other macroeconomic indicators. From GDP, we expect that it will slow down due to all of these challenges. Inflation will remain elevated. Exchange rate pressure will still be there. And sadly, despite even increase in oil prices, we are not seeing a major accretion to foreign reserves. And if you look at one important indicator as well that we just saw, I think about yesterday, capital importation, we've also seen that it has gone to ridiculously low levels. We got $5 billion last year, and in 2019, that was what we got in just one quarter. The total value of what we got last year was just what we got in one quarter in 2019. So it is high time, policies are put in place to ensure that the economy is afloat, and we shouldn't put the cart before the horse. We should address the key problem, not big man's problem, like I put the new currency design. The problem is inflation. Let's address money supply. Money supply is growing faster than expected. What affects inflation is not currency outside the bank or currency circulation, it's money supply. So all of these problems should be addressed. I will talk about subsidy as well before I join the program. That should also be addressed because the higher the amount of money we pay on subsidy and other extraneous, expenses, the higher the fiscal deficit. And what brings about borrowing is deficit, because if government is spending more than revenue, you have to cover up. And how do you cover up? Deficit. Alternative to deficit is to borrowing is increasing money supply or printing money or sales of assets. You and I know that in Nigeria, people will push back if government says that they want to sell certain assets, and we are already stuck when it comes to printing more money. So the only option right now is debt accumulation. And we already know what that is doing to Nigeria in terms of debt metrics, from debt stock to GDP ratio and debt service to revenue ratio. So I think we should just focus on the right problem rather than focusing on currency redesign. As a matter of fact, I think as early as possible, the CBN has to talk about it once and for all. Let there be smooth, economic activities. Nobody should be thinking about, December, we are waiting for the CBN to say anything. It should be addressed as early as possible. Let everything move on, and we should focus on more pressing issues, not currency design.
Interesting conversation as usual, Mr. Omoshuri. Time is never enough having you on the program, but I must thank you for your brilliant contributions as usual. Mr. Omoshuri is an investment strategy manager. He's with AfriInvest West Africa. Thank you for your time on the program.
You're most welcome.
Do enjoy the rest of your day.